Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Wednesday, October 15th, 2025. It's 1:32 p.m. Eastern Time, and this is video number 2 for the day. I just wanted to follow up with this chart and a couple other things. So in the earlier video, I made very clear that I kind of gave you levels, and what I did, I colored it here. Everybody likes paint by numbers, color by numbers, whatever it is. So we color coded. I color coded these charts, showing you the objective levels. Again, it was all covered in the previous video, but not with these purple boxes. So this is at about 602-ish resistance level that I've highlighted multiple short entries since we broke down on the kickback rallies, including today. And then in the video I stated that's kind of my no-go zone right here. No-go, no reason to stop out. The sell signals are still intact. Stop should be somewhat above there. And I said, it's possible if they can build on it, maybe we go up and back test. So what the purple boxes are the objective entry points, in my opinion, to, again, everybody's different. Everybody has a different cost basis. Some of you are actually bullish, looking to where to add longs, and you can use these same levels in reverse. So let's start out with just saying those that want to get short. Again, any rallies up to this purple box here, around that. Now you have the recent highs a little bit above there. So what I usually will do at that point is add a line. This is where, that's where I initially had it before we even broke down. That was, remember, S1, support once broken becomes resistance. And you can see now I'm going to round it off because everybody loves round numbers. When you get close enough, that's 603. And so that's now the level that's capped all the advances other than this little pop today. And in that last video, so I said, at that point, you've broken support, which on face value is bullish, unless it fails. So it has now failed. Now remember, again, this is a function of the VIX. This whole boom, 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 it's a breakdown, volatility, right? We could certainly get back above there again. And if we do, same story. It's just a kind of a no ad zone. And again, depending on how you're trading this, if you're whether you're an active swing trader, a day trader, a long-term trend trader, your stop will be commensurate with your price target or targets. And now, as I said, this would be if we happen to back test the wedge. It's the same primary uptrend line on the daily chart. This is the daily chart of QQQ. That's the primary uptrend line off the April lows. Problem with back testing, unless it happened to happen today on some huge move up, it's going to take you above that bearish engulfing. So I want to be clear on that it would, although a back test of a broken trend line from below is an objective entry, and that's why I have it highlighted here. Depending on your trading plan, you might want a tight stop above the bearish, or you might want a more liberal. And it could also keep in mind, guys, that trend lines are dynamic, meaning they're not at static price levels. They change every day. So let's just fast forward a few weeks. Say it took a while to zigzag our way up there. I'm trying to get my arrow tool here. Bear with me. So let's just say we bounce around for a while, and then we back test way over here. At that point, it's going to be quite a bit higher. And so maybe you did stop out there and you could re-enter there. Okay. I can't say if and how and when a back test is going to look, or even if we're going to get one. And I can't tell you if we're going to back test and it's going to be one and done. If we do, we go down, or we'll continue to back test and then go down, or we'll ultimately take back the trend line. Too many variables there. All right. Let's not overcomplicate it, but I do need to point that out. There's a lot of variables. That's why I do these videos every day. I constantly say the charts are dynamic, and therefore so is my analysis. What I can say a little bit with more confidence is that breakout we had earlier did fail. For multiple reasons. I stated closing out that BIZD today, call it gut feel instinct. Even though we were starting to pop above that level this morning, I had a feeling that this breakout would likely fail. Again, I'm going off what happened last week. Make no mistake about it. Unless that changes, as I said, those sell signals I told you in recent videos were 10, in my opinion, on a scale of 1 to 10. Both trendline breaks, big bearish engulfing candles. So that sets the tone as to what I think is going to happen, which is more downside. And then, so again, we've now entered that purple box. Since that last video, we were above it. But as I said, if we fall back down, then that means this whole little thing right here at least as of now, was a whipsaw, i.e. failed breakout. And so those that bought it are now underwater. And you can see my support levels are marked here. We've hit support so far, 596. If we take that out, it starts getting a lot thinner below that, meaning by thin, talking about the volume price histogram where people have bought. You can see this is just, I toggled down to a 5-minute chart. This is where we've been buying. There's a gap there. It was resistance here. It was support here. That's why I've had that line there at 596.20. And so if we break that, we go down, and then it gets, so you just have these couple panic type sell-off reaction lows. And so again, I think that will probably do the trick. It would certainly help solidify this false breakout today here. And again, if you want to, use this as a guide, as I said this morning, a break of Friday's lows would be the next objective short entry as well. Again, objective short entries can be a bounce back to resistance. They can be a failed breakout and move back down below a resistance level. In other words, resistance once broken becomes support, 603, but you fell back down below it. And then this is where the next level would be. PPO is still in bearish territory below the zero line, and we're coming off that big divergent high there. A couple other things I want to show. I'll just revisit the VIX. Our proxy, like I've said, the VIX, spot VIX, I've given you the level we need to bust about 22. And VIXY is the, for those of you that don't trade the futures, this is your proxy here. And that's it. So we had a breakout, a buy signal there, then a breakout of the second resistance level. R1 was the downtrend line, R2. And we've been back testing it now for the last, really ever since the Friday when we took it out. And today we reversed off it. So that support, former resistance, once broken, becomes support, continues to hold. And it's just like the stock market in reverse. When I look at the VIX, I see the stock market upside down. I see this recent high. It's the same level I've been telling you on VIX that we have to take out since Friday, since we hit it, about $22. And so again, you can just use VIXY because that's your trading price, or the VIX futures. And so, as I've been saying, a pop of those highs will likely open the door, and it should be pretty quick, especially if it coincides with a break of Friday's lows in QQQ and SPY, right? And likewise, if we drop down below there, we popped that level today on QQQ, but it was brief, and you can see the VIX kind of held in there. It didn't break that support level. So I'm liking this action. I just want to say that so far. But again, let's see how the week finishes. And then that BIZD, again, for the reasons I stated, I looked at the charts. I already told you, I don't want to spend too much time on it, but a nice exit. Sold it pretty much the highs, got that right out to you. And so far avoided a give back of about 2%. And the reason I'm doing this follow-up video, I know a lot of what I just said is reiterating or repeating what I said earlier. But I'm constantly scanning the markets, and one sector that we actually have an official short trade on, both with the sector ETF as well as one of the regional banks, Fifth Third. That's KRE, the regional banking sector ETF. And again, in my opinion, lots of reasons to be short. Primary trend line was broken and back tested here, back tested again, rejected with that secondary smaller wedge breaking down, and here we are. They bought it, as they usually do, on pullbacks to the 200-day moving averages. Remember, Friday, a lot of things hit support, and including the regionals, and they bounced. But what I wanted to show you today, what stood out, let me just check on our Fifth Third trade. I know it hit our first target. I'm waiting for that to go to open the door to the second target. We came very close. Fifth Third, after hitting our first price target, bounced off, like all the regionals, hit the 200 days on Friday, so you had a little reflexive bounce there. And so still maintain these targets, and we'll likely add additional targets. But here's what I wanted to show you. I noticed this stood out to me today. FHN, First Horizon's a big bank, a big regional bank. So I noticed it was down today as I was doing my usual what I call manual scans. I'll just look at the sector, look at all the, sort the components by winners, gainers, see what's moving. And this one, when you click on news, It's funny because the news this morning, the headlines were, they changed it. It was because the news, this just came out earlier today. They had, they were cheering it, the media. First Horizon surges, where is it? It's almost as if I guess they pulled that headline. I probably still have it open in another window, but that was the earlier news today, up to 6 hours ago. Let me do tools, recent, sort by past 24 hours here, get the recent headlines. And now they're saying it stinks, but sinks. I'm sorry, the stock sinks. Earlier it was First Horizon rallies are up strong on stock stores. There it is, TradingView, and they were high-fiving and cheering it. And then something happened, guys. Look, I haven't dug into the news. The initial reports and everything were hunky-dory, and so there's a reason I'm getting to this. So there was the surge. So there's where it closed yesterday. You see that yellow dotted line on this chart? I dropped down to a 1-minute chart. So from yesterday's close, the stock was up as much as 3%. I wouldn't call that soaring, but if that's what, I guess that's what whoever wrote that article thought. But then you can see that abrupt turnaround in the stock dropping from the highs about 16%. So I'm going to guess, because they reported this morning, this is just a guess. Look, the news, I came across this a couple hours ago. I haven't checked the updated news to right now when I just ran the search. I'm going to guess that there's a good chance, and maybe it's not the case, but a good chance that after the earnings were reported and they made their, on the conference call or somewhere in the 10Q or whatever report they put out, they probably talk about the potential or likelihood of one or more loans, big loans that they have going south, or default rates spiking up. Again, that's been my common theme. That's why I was highlighting BIZD as a short and bearish, and it broke down, and then sure enough, there came the bankruptcies, and I think there's more to come. Again, I'll watch this. It's something worth monitoring. All I can tell you, there's something going on. That's a big, big reversal there. Now, they're stick saving it. The day is very young. Right now, it's undercut on that big drop down below the 200s. Right now, it's testing the 200s and price support. But that's a pretty ugly candlestick right there. And this is usually how these things, you start to build momentum. As I've been telling you, I'm watching the financials. I'm watching the non-bank financials, private equity, private credit. I'm watching credit cards, specialty lenders like Rocket and all these other ones. And of course, I'm watching the banks, both regional and the big banks. And so we'll continue to monitor this situation. But again, you're starting to see again these fissures forming, or little cracks. And maybe it's nothing. Hey, maybe that's a great buying opportunity. I thought BIZD was the other day, but again, I decided to sell it for the reasons I stated earlier. And now I'm starting to see this, and I'm glad I took profits on that one. Again, if it goes to my final target, it goes up another 6%. Big deal. I already milked half of that in 3 days, and I don't want to have to worry about waking up to boom, this thing being really down because here comes the next bad loan that just went bust that they didn't see coming. Okay, enough of the doom and gloom. For those looking for long trade ideas, this one. Yes, I noticed this one today, breaking out. FF, Future Fuel Corp, nice breakout. Day is young. It's probably going to park here. That's my first target. It's too late now to act on. It's at that level, 432. I had it charted, but I didn't have an alert set, or I would have tried to get it out to you earlier. But also at the 200 days and that price resistance. So if it can power on through there, ideally, you don't always get a correction, but if it gets a little consolidation or pullback correction, maybe back test the trend line, work off today's overbought conditions, then that would be a one to watch. And there's your 3 targets. That would give you a total. If it breaks out above there, whether it's today, if they print a solid daily close, that could do the trick. 17% to that 505 target, 32% to the next target, and then a total of about 48%. That's in the specialty chemicals company, Future Fuel. And then back to what I was saying on QQQ, just again, because I do know at least some out there, think the market's just going to continue to go up for the foreseeable future. And then you can use these same levels in reverse, because if that's a level I think that's going to open the door to the next wave of impulsive selling, then that's where you might consider a stop if you're long, and or look to go long on a pullback too, because that's support in these two recent lows, right? And so anything much above there, just like I wouldn't be adding to shorts here, I wouldn't be adding to longs there if I was looking to buy the pullback and go long QQQ. All right. And likewise, that's not where you want to buy on a back test. If you're bullish, you want to see that trend line recovered and you want to see the bearish engulfing candles taken out. Then you'll probably have some short covering and you could get a little, nice spike up there. Somebody asked, I saw a question, a comment, I haven't replied to it, so right before the video. They asked about UNG. I updated the other day, told you not crazy about how we pulled back off T1, and the pullback's been pretty impulsive. So we hit our first target, we took the breakout there, but it's just been falling, and now, well, the other day when the last update I did, we were just starting to take out that previous low. This was the last update I provided. I can't remember if it was in video or a written to one of the written reply to one of the comments, but we're below there now. Look, from a long-term perspective, we're still at I don't have the chart queued up, but the whole reason for buying here, we were at long-term support. We're at the pullback target I thought we'd get to from last year when we hit my maximum upside target on the long, and this was long-term support on the weekly charts and the daily charts of natural gas futures. I don't have that chart queued up here. And so we're back to that same support level, and the divergences are still very much intact. So yeah, a case can be made. I can tell you quite often when they take something like natural gas down to test a low, the nefarious forces that be will blow those stops out and just take it down under, give you a little stop blowout, stop rate, and then turn around. But you're at support. That may not happen. Sometimes you put in a double bottom low. All I can tell you is still have the divergence. I'm just not crazy about it. You'll want to see, of course, this downtrend line, near-term downtrend line taken out. So yes, guys, if you took it there and you're targeting that T6, I'll still maintain that. Then your stop, you're targeting, and again, if we get to T6, I told you this before, anywhere close, once we take out T4, 5, I'm probably going to add additional targets. But that'd be a 47% run. So you can easily give yourself a 10% stop loss, and then you have a nearly 5-to-1 RR. Now, you may not want to do a 10% stop loss. Just remember, I say this often, if you're going to trade the Widowmaker, which is natural gas, don't run it with a 1-2% tight stop. You're just going to get clipped in the noise. This little sucker is volatile. I've said it many times. I've watched natural gas go up 10, even 15, even 20% in a day, only to see it do it again the next day and sometimes even the day after that. So it's volatile when it wants to run, and that cuts both ways. So the key to trading it, small position sizes, allowing for a wider stop in percentage terms. It's all about the amount of dollars you make or lose in trading, not the percent. You can high five yourself if you took that Beyond Meat and made 100%. But it should be it's a gunslinger trade. You shouldn't have put as much money as you'd put into the Pepsi trade we did earlier this year, or Novo Nordisk, or any blue chip, more established company. Same thing holds true with natural gas. So that's about it. I don't have much else to add. I just wanted to give you kind of those levels on QQQ, color coded really, and let you know that so far today. And again, I'm not putting too much into it because all we've seen are whipsaws lately. But that was a false breakout, and we're back into that, back below that right there, which is also the previous all-time high at that point. Remember, all-time high, pulled back, tested again, rejected, breakout candle, successful back test, and then we failed the breakout here. So the bigger, much bigger breakout, this breakout failed already, and now in a shorter term, that one's failed. But again, nothing big happens, in my opinion, until either Friday's lows are taken out or we move above the recent highs and negate the bearish engulfing candles and maybe take back that trend line in QQQ. Everything in between there is probably going to be a lot of noise. And if you know what I'm talking about, this is what noise is in the stock market. Increased volatility, back forth, chop and slop. And if it's not your kind of market, don't try to actively swing trade it. Have a trading plan. Don't trade the indexes if you don't know what to do, long or short. But if you're bullish, have your stops in place and have your price targets set. and stick to your trading plan. And if you're bearish, same thing in reverse. You have a position, you have your stops. They might be right over the recent highs. They could be lower, could be higher, depending on what you're looking at, and of course where you're targeting. And then if Friday's lows get taken out, that's where you can increase. In my opinion, my confidence will go up a lot higher if the deeper targets are going to be hit, and that's why I'll move to a more aggressive positioning on index shorts as well as the VIX. All right, I'm going to wrap it up here. Get the video out to you guys. This has been Randy Finney with Right Side of the Chart. Have a great day.